After reviewing dozens of comments on our latest videos, it seems that a portion of our audience are quite concerned that we might actually be slipping into a bear market. In this video, we're going to jump down into the world of Bitcoin, which is leading the way, to take a look at what is going on when it comes to the Bitcoin price action and whether or not we are actually dropping down into a bear market, or whether or not we're actually going to be enjoying some fantastic highs in the coming weeks. As we get into this video, if you do find it useful and informative, hit that like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap that bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Right, with all that said, done, and out of the way, let's jump on down to the desktop and take a look at what is going on with Bitcoin. Okay guys, so for those who are familiar with the channel, will be very familiar with what we've got in front of us right now. This is a Bitcoin paired with the USD. This is the weekly chart, and we are using Bitstamp because it has the serious number of weeks worth of data. This goes all the way back to 2000 and, let me just get that right, 11, right? August of 2011. So loads of data at our fingertips here that we can actually dive into and actually see what's gone on historically. And obviously, you know, where the bull runs are, where the bear market start, all that kind of good stuff. This has already been dissected quite a few times across the 2013, 2018, and obviously the most current bull run, right? So we have these kind of three windows to kind of look into. Okay, so the first thing we're going to do is just take a look at what was going on here in 2013, right? Because we had that double peak scenario. Peak one, everyone thinking, or at least the majority of people were calling this a bear market when you're slipping back down, only to have this thing run back up again to a double peak. Okay, this is something that's relatively similar to what we have currently experienced in 2021, as in we had one peak and then obviously we set a new all-time high, but very, very shallow at the moment. So the expectation is obviously still to kind of have this run to the upside. Okay, very similar to what was going on with the 2013 bull run. Okay, this is also can be dissected down a little bit further, right? We have basically from when the bull run started through to that first peak, it was a 315-day run, right? A very small bull run, but again, early days in Bitcoin, it could have been short bull runs and longer bear markets, all that kind of stuff. So a lot of stuff had to be figured out, right? So we can understand that people were getting a little bit concerned first time round, not really knowing what's going on. 315 days, and people were calling it a bear market, right? So we have to understand that you know, that isn't exactly what was going on. You saw the correction come in, and then we started to see a nice push to the upside. That actually meant that the entire bull run was actually 546 days in its totality. Okay, so not the short 315 days, but you know, an additional few hundred days there at 546. Okay, so peak to peak, there was a 231-day run. Now that's just out of curiosity. If you kind of put your timelines there, if you're going to peak from one point to the other, what kind of timeline you were looking at. Okay, so that's a 231-day peak to peak scenario for 2013. Nice, interesting kind of thing. We can also acknowledge that we went up in that that run, basically 24,500%. Okay, so quite significant. Obviously, when it's low value and it goes up to significant value, obviously the percentage gains are greater. They'll actually get diminishing returns over time, okay, in terms of percentage yield, right? So we can see that we had 24,500 in 2013 and 5,500 when it was in 2018, right? Because obviously you're starting from a higher base. You can't push up massively in the same way. With that being said, though, obviously we were then, after setting the high of 2013, went into a bear market. And you can see the green and the red are quite highlighted and vibrant, kind of moving averages, if you will. This is the Gaussian channel. Now, the Gaussian channel is a good indication of value, okay? And this is important when it comes to the bear market. As you can see, there are two kind of key red areas, right? Those are two bear markets, and we'll get into that in a moment. But as you can see, when we came out at the peak of 2013, we headed towards our Gaussian channel in a really strong way. We touched on the Gaussian channel, we slipped into the Gaussian channel, through the channel, and then it turned red. That's where the value reaches tipping point. Basically, when this Gaussian channel turns red, you're in a bear market, and that is pretty much where you want to be buying up, because that's the key area where you're going to be finding the maximum return. So always look for that. Now, in theory, when you actually, as soon as you drop into the Gaussian channel, you'd be pretty confident in saying you're in a bear market, okay? Riding the top of it, uncertain, you could bounce from it and you can continue that road to the upside, right? So we came very close down here, touching the Gaussian channel, and we rode back up. As we slipped into 2014, we touched the Gaussian channel, we didn't close inside it, we rode the top of it, and then eventually we did actually close a weekly candle inside the Gaussian channel, which actually triggered the bull run or the bear market for 2014, 15, and basically then we start to get the reversal in late 2015 into 2016. Okay, and this is where the bull run started for 2017 and 2018. This one was a 714-day run. Okay, and again you can see that the Gaussian channel goes from red to green. Okay, good visual indication. Now obviously riding this up, we didn't actually come down to a double peak like we had in the 2013 model. Instead we kind of had a nice steady rise with Bitcoin peaking out nice, and then it pulled back down. Okay, so peak to peak, bull run peak to bull run peak, it was a total of 1,470 days. Important to kind of just understand, what kind of timelines are we talking about. Okay, so basically, 2017 was a nice steady rise for Bitcoin, reaching that peak, and then after that we did pull down. We touched on the Gaussian channel in the very same way that we did when we had the 2013 bull run, and again in a very similar way we fell in, get the weekly close candle inside the Gaussian channel, and we're in a bear market. Okay, we come down, the Gaussian channel turns red. That's your point of value where you want to be buying up. This is where things get a little bit off, specifically with the bull run for 2020, 2021, right, where we are right now. And this is because it should have actually started earlier. But obviously with the pandemic, we got pulled down. Now the Gaussian channel did not turn red. Okay, it basically does indicate that we were technically bearish at this point in time. The entire stock market fell down, crypto fell down, some fantastic opportunities. This should not have actually have happened. Okay, in theory, this was an outlier event. It was a black swan or whatever you want to call it, but this should not have happened. So as a result, obviously you can see great value coming in here, but the Gaussian channel didn't have enough time to actually turn red, and we actually got the reversal when we pushed right back up again. So although we actually were in a bear market and we pushed out of the Gaussian channel, turning bullish, we did actually pull back down because of the pandemic. So we have to acknowledge that. This is actually what I call wave 2 on some of the other Bitcoin charts. Now, obviously, we triggered the bull run. We had a nice, good start to the year. We set the all-time high at 60K or whatever it was. Then we pulled back down. And we touched on the Gaussian channel. We did not close inside the Gaussian channel. Another key point. We actually slipped inside it for the majority of a week, but we didn't close inside on the weekly candles. Okay, and then as you can see, we bounced on it and we've continued to rise. Right now where we are is actually a good indication that we are not actually close to the Gaussian channel. We're actually still quite higher, and the expectation is not to pull down all too much further from our current position. Even if you pull down to 50k, you're not coming anywhere near getting into the Gaussian channel, right? So again, we have to acknowledge that there's still a lot of room for Bitcoin to pull back before you would even consider going into a bear market. So calling a bear market at this stage is quite, it doesn't make a lot of sense. It's not something that is being backed up technically. Okay, so as we break this down further, obviously we can take a look and think, okay, well, we obviously have good expectations of where things are going. We can see, a good impulsive move to the upside on the weekly chart. And obviously inside that impulsive move, as per Elliott theory and Elliott wave, we can obviously find lots of waves, right? Lots of correction waves, lots of ABCs. We can see lots of 1, 2, 3, 4, 5s, right? Et cetera, et cetera. And it always depends on what timeline you're looking at. But ultimately, if you zoom out to the weekly, it's very, very clear that you're not going bearish. In fact, you're still very bullish, okay? And we are looking to continue that move to the upside. Now, obviously, these yellow lines just an indication between the peaks of the bull runs where we'd anticipate Bitcoin potentially peaking. For the 2021 run, that's based on 1,470 days, i.e. peak to peak, that would potentially put us about the 20th of December. Now, there's no guarantee that's going to be the date of the peak of the bull run. For Bitcoin, that is. It could be much further extended, and it all depends on what else goes on in the space. But for us right now, knowing that the Gaussian channel is quite a distance away from our current price of Bitcoin here, we've got plenty of room to keep growing. And again, this is all backed up on the smaller timeframes as well. We are looking for that slightly deeper correction on Bitcoin. I think that might have finally come in a little bit as we're heading down to some of those slightly lower levels. And then we're starting to see that reversal come back through. And anyone who was or has seen already the charts that Matt from 𝗖𝗢𝗠𝗪𝗏, the CEO of 𝗖𝗢𝗠𝗪𝗏, has drawn up, he's very confident on things, how they're playing out. And again, he's got a whole wealth of experience. So definitely worth checking that out. Now, of course, when we're in a bull run like this and things start getting heated up, it's important that we often think about how we would exit the space, right? And a part of that is going to be making sure that you have your exit strategies lined up, not just from price points where you're going to be selling, but also how you actually get out of the market. What exchanges are you listed on? Which brings me nicely to today's video sponsor, which is 𝗕𝗘𝗪𝗏. Now, 𝗕𝗘𝗪𝗏 is the world's fastest growing crypto app. You'll probably be very familiar with 𝗕𝗘𝗪𝗏 right now because they've got so many things going on in the space. Obviously, Matt Damon being the face of 𝗕𝗘𝗪𝗏, the 𝗕𝗘𝗪𝗏 arena that's been recently put out there in the press with a record $700 million naming rights associated with it. Obviously, with the application, it is another exchange that I do think that it's important that you also are registered with. You get registered with as many exchanges as possible. With 𝗕𝗘𝗪𝗏, you're going to be able to use this on your phone. Use this to buy and sell cryptocurrency at the true cost, which could be really beneficial during the bull run when you're looking to exit the market when so many exchanges do happen to go down. So with that being said, you can of course get access to some fantastic features with 𝗕𝗘𝗪𝗏. As I said, buying and selling crypto at the true cost, which is fantastic. Sometimes some other exchanges will actually use the base rate of a cryptocurrency to hide their fees. With 𝗕𝗘𝗪𝗏, that is not the case. You see the true value of the cryptocurrency and then the fee is separate. Okay, so again, it's really important that we kind of acknowledge those things. Now, above and beyond that, we really do like their Visa debit cards. Like, these debit cards basically give you cash back in the 𝗖𝗢𝗠𝗠𝗘𝗥𝗦 token. I'm not going to talk about the 𝗖𝗢𝗠𝗠𝗘𝗥𝗦 token in too much detail in this video, but ultimately that's a fantastic way to earn a nice passive income on your everyday expenses. So if you're not already familiar, basically you can use the 𝗕𝗘𝗪𝗏 like any other prepaid card. There are several to choose from, and you basically stake your 𝗖𝗢𝗠𝗠𝗘 tokens and you get different benefits on the different types of card. Now, ultimately, we use this pretty much for everything. Chris actually bought his Range Rover Sport using his 𝗕𝗘𝗪𝗏 card and earned 3% cash back on that. I recently re-renovated my kitchen, 3% cash back on that. I've also redone pretty much my studio here with the Samsung G9 Odyssey, a G5, and basically a whole host of tech also using that 𝗕𝗘𝗪𝗏 card, earning fantastic cash back on all of those everyday expenses. So if you're not familiar, there is a link in the description down below. Do go ahead and check out 𝗕𝗘𝗪𝗏. I don't think you'll regret it. And also, if you do actually use that link in the description below, go ahead and stake some Crow for that debit card. You'll also earn a $25 bonus. So why not go ahead and check out 𝗕𝗘𝗪𝗏? Now, at this point, I'm going to jump over to the advice.io dashboard. And what we're going to do here is actually just check out Bitcoin. Okay, and we can see that it's a B3 rating overall. We have actually pulled back in the last 24 hours. There's a couple of things here that I really want to kind of just point out to you guys. So for those who are unfamiliar with advice.io, they use artificial intelligence and machine learning to help us understand the underlying value of cryptocurrencies. And for Bitcoin here, we can see that the B3 rating overall, we have pulled down a little bit. And the fear and greed index is actually relatively neutral, right? So you can see that it were incredibly greedy not too long ago. We have pulled down into a neutral position. We're not fearful at this point in time for Bitcoin. This is really important to understand because although a lot of retail investors might be panicking and selling, etc., for Bitcoin right now is actually quite neutral. There's not fear, it's not greedy, it's kind of just waiting to see what happens next. We can also see a Sharpe ratio. Now, this is the area that we should potentially be concerned with, but I am expecting this to start to get a bit of a reversal. This is actually a rating of D. The Sharpe ratio is your risk-reward ratio, i.e., should you be exposed to an asset? Do the rewards outweigh the risks, or do the risks outweigh the rewards? And for Bitcoin right now, having exposure to the asset is being indicated here from this AI that we might not want to be exposed to Bitcoin right now. Okay, so again, I do expect this to reverse through, as I do expect us to kind of be bottoming out now on this Bitcoin correction. And once that starts to actually find its true bottom, we should start to see a good impulsive move to the upside, which could trigger this Sharpe ratio to rapidly move above that 50-day average. So we do have to be aware that there's lots going on here with BTC, but those are the main issues that I'm seeing here. They've got good liquidity, so that's not a problem. The profitability is still perfectly fine, and it's good to see that that sentiment is relatively neutral. It is literally just that right now is not going to be a great time to be potentially diving into the world of Bitcoin, not until that Sharpe ratio starts to get confirmed that things are starting to correct back to the upside. So again, important to recognize what's going on there with advice.io. Now, back onto the charts here. Obviously, as we've spoken about, we're not in the Gaussian channel. We're not near the Gaussian channel. I do expect this bull run to continue late into December, potentially even early 2022 for Bitcoin. Once Bitcoin has peaked, then I do expect those altcoins to also go absolutely insane with fantastic surges to the upside. So you definitely want to be watching out for that. Just because Bitcoin is taking a reversal does not mean that the entire market is also going to reverse when the peak of Bitcoin has come in. In fact, what you will find is when Bitcoin peaks, the other coins will actually start going parabolic and they'll move to the upside. Okay, so the fact that the entire market is correcting together and everything is correlated, it is actually an indication that bull run hasn't peaked just yet, because those altcoins would actually be surging to the upside too. Now, when we actually jump into the world of our BTC to USDT on this weekly chart, we can, of course, acknowledge what is going on with our charts here as well, right? So we have this good 5 impulsive moves to the upside. So this is really now just focusing in on this particular bull run rather than across the various bull runs, right? So here we can see we have this good surge to the upside. What we're experiencing right now is not abnormal, and it is still very much in line with our expectations of this fifth wave. The fifth wave will be made up of 5 impulsive moves in itself, okay? And again, we can acknowledge what has been going on previously, right? So basically, if I grab hold of this, we can see that our third wave here, we had 1, 2, 3, 4, and 5. But then that was followed up with an ABC. We had our A, we had our B, and we had a C. And then now we are following this up with our impulsive 1, 2, 3, 4, and 5. Okay, so again, we are very much in line with what is going on, but it's important that we don't get too focused in on those smaller time frames. The bigger picture tells you absolutely everything that you need to know, and you will just get lost and drowned inside those hours, those the hour chart, the 15-minute chart, the 5-minute chart, etc. There's a lot of noise in there that you kind of clouds people's judgments. It makes you panic, and really leave that kind of stuff to the day traders, the people who are literally scraping profits every kind of 5, 10, 15 minutes or so. If you're looking at the longer term picture and you're not using leverage, because that's just awful in itself, and you're basically looking for finding the trends that you want to be backing, then you want to be focusing in on those larger time frames, right? The 4 hourly, the 8 hourly, the daily. They're good for kind of short term month kind of views. And again, if you're looking for true bull run perspectives, hodling our way through dollar cost averaging better positions, then you want to be looking at the weekly and the monthly charts. Those are the ones that give you the better picture of the overall of what is actually going on. So guys, I'm going to leave this video there. Hopefully you have found this useful and informative. If you have, hit that like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe? Tap that bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With this said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.